Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, the Australian dollar shows no pullback on Friday as the market bulls extended the renewed gains after a weaker than forecasted data of CPI and retail sales in the US, which now raises concerns about the strength of the US economy and questions whether the Fed Reserve will still view rates higher this year, with a December hike still being priced in. Now, looking ahead, we do have the Chinese retail sales and also GDP today. That could put a positive or negative spin on this current rally. And then tomorrow we have the RBA monetary policy meeting for June, along with this week the unemployment change and also unemployment rate for June. So keep an eye out for those figures because they could actually see the market or even post a negative spin on this current rally. But as I mentioned, I'm not supportive of a break above that 78.45.60 and would reassess and see how the market plays out if seen. Towards the downside, support now seen at 77.65 and a break beneath there would give further scope to a negative sentiment. Well, the euro currently challenging this top side resistance that comes in at 114.85. Now, as you can see over the last couple of years that the market has not been able to sustain above that level for more than a week. So I do expect to see any advances to fail towards the 115 to 116 level and eventually give the gains back and look to the support that comes in at 113.65. Now, a break beneath there would give further bearish outlook and bring in a target of 112.40.45. Well, dollar yen still maintains its bearishness as the market now breaks lower and it is accelerating, as you can see here from this very bearish candle. Now, I did say the support comes in at 111.80 to 112.10 or even possibly as a bullish foundations. However, the concerns now from the technical outlook is the fact that we could be looking lower and coming to a target of 111.10.25 and reassess from there. Any advances should find a cap for the start of this week at 112.95 to 113.20. Now, from the strong rally in sterling on Friday, clearing at 130.30.45, is seen as the strongest gains since January 2017. Now, I'm sitting on the sidelines at the moment. I'm not supporting this move, purely for the fact is that we can easily sharply turn down. And over the past, you can see the market does do exactly that. Although the upside could come in a target of anywhere from 132 to 134, the support now seen at 128.60 to get the market negative. So as I mentioned, I'd rather sit on the sidelines and see how it plays out for the start of this week. Well, as you can see, the market for gold has remained bullish. And as you can see, is now from the conclusion of the break from the MACD, does give further scope to the upside. And look beyond the target of 32, and look towards 38 to 45 as a potential target, with any pullback to find support now from 24 and a base at 18. Let's wrap up with oil. The market is still relatively bullish as it now clears this level at $46.80.85. Now, that being said, I am cautious. I feel the market is getting a little bit tired. As you can see, some of these candles are not the strongest and the indicators are not as bullish, even though we have had a nice rally for the last 6 days. Looking towards 48.60 should find the market to fail, and I expect to see it look back towards that $45.50 and reassess from there. So that wraps up my daily video. Thank you very much for joining me, and I hope you have a wonderful start to the new week.